Hello, everyone. I'm Deepa Vegesna, and I'm the Chief Digital Officer at Revfin. What do we do at Revfin? We basically have revolutionized finance for a particular sector. It all started with our CEO and founder, Samir Agarwal, who has been a banker at HSBC for over 14 years. He then joined a UK firm which provided loans to customers with low credit score. This is where firsthand he saw the human bias that enters a loan application process. How does the customer look? How did he dress? How is he speaking? All of this made an impact on the final approval or rejection by the person who is sitting at the desk. On a personal visit to India, he saw the extent of the problem. 46% of households in India live in the non-urban areas and are unable to get any kind of financial options from regulated entities like banks and big financial institutions. Two main reasons for this: human bias against these customers even before they step into a retail bank, and second, the underwriting, which is a traditional model using credit scores, which basically makes this particular population financially excluded. That's when Samir decided to come back to India and start Revfin. Since the inception, our goal has been to provide loans digitally and to financially underserved segment. Now we had the customer segment. We had to figure out what is the product we are going to base our finance on. After a few trials, we ended up with commercial electric vehicles. As you can see from here, this is a high growth segment at around $50 billion annual opportunity in 2030 just in India itself. But 6 years ago, when we started in 2018, the three-wheeler segment, electric three-wheeler segment, that is the tuk-tuks, had a problem. The manufacturers and retailers were not able to find financing solutions for their retail customers because banks were not ready to finance an asset which was not yet proven in the market. That is where our innovation came in. We use technology and we made the entire app journey for the customer up till approval or rejection on the app, thereby first off removing the human bias that came into picture. The second part to resolve was the underwriting. The traditional models which use credit scoring measure the capability of the customer to pay back. So we came up with a new model, an additional model using scenario-based psychometric test. Using these tests, we measure the intent of the customer to pay back the loan. The entire process of KYC, the psychometric checks, the biometrics like face match and liveliness checks is done on the app under 16 minutes. Under 16 minutes, the customer gets either an approval or a rejection. Starting 2021, we started to put telematic devices on all the vehicles that we have financed. This meant that we are now sitting on 3 years of a treasure trove of data, which gives us analytical data on how the driver is driving, which particular vehicle model is doing good across India because we are present in 23 states across India, and how the terrain and the income projections happen. After 3 years of data collection, we are now able to plug this information back to make our underwriting much more efficient. So what is the impact that we have made? We have around 40,000 customers driving the vehicles. You can see the happy faces of our customers over here. 79% of these customers are financially excluded segment. That is, they either have no credit score before taking a loan from us, or their income is less than $300 a month. And incidentally, our first customer was a woman. The numbers that you see here, the 25% women customers and 12% used customers, are actually derived organically because 96% of the customers are coming from tier 2, 3, and 4 towns. Automatically, the inclusion is coming in. For example, the 12% youth customers. This started coming in last year, where we saw a huge increase in the number of young people applying for a loan because we introduced the vehicle segment, two-wheeler vehicle segment, which is used for last mile delivery. So all the gig workers who were young or doing a side job while they were studying were more inclined to take a loan from a reputed and a recognized financial institution. Over the years, a lot of equity and impact investors have started to collaborate with us. I would like to bring to notice on the impact investment funds, we have DFC, which is the US International Fund, and SIDBI, which is Small Industrial Development Bank of India. These two funds are very focused on their respective mandates to provide for women. This year, we are very happy to announce that we have started a specialized scheme with SIDBI to provide a scheme to women empowerments who are the women who are coming from SEVA. These women are typically working in the unorganized sector in Tier 1 and Tier 2, either as housemaids or construction workers or in small factories. Basically, they are all contract workers, so they do not fall into the regulated sector where they can go into a bank and get a loan. By teaming up with SIDBI, we are able to provide them loans at much lower rates, thereby making sure that they get a two-wheeler that they can use to go back and forth to their work. All through years, we do literacy drives in order to make sure that our customer understands what it means to have a credit score, what it means to pay an EMI and not default on an EMI because it impacts their credit score. This year, we conducted a drive in Uttar Pradesh, a state in India, where we called all our women customers and their families to come celebrate with us Women's Day. Now, this is what we take pride at Revfin, to see that pride in the customer's face, the smile that they own an asset more than anything, and the fact that they are all involved in moving forward the green mobility movement in India. And with a core team with decades of experience and with the visionary leadership of Samir, we are very sure to scale this business much larger. As a conclusion, these are some of the numbers. We have been Series B funded last year. We have dispersed about 650 crores, which is around $78 million, out of which, and our NPAs are under 2%, which is first also in the industry. And with this, I want to conclude my presentation and open the floor for some questions before, yeah, from all of you.
Wonderful. Thank you so much, Deepa, for an excellent
Sorry.
presentation.
Okay. For a while, I thought maybe it didn't.
No, it's all good, all good. Thank you so much for that presentation. Okay, we're going to open the floor to our panel of judges. I see Candy is ready. Go ahead.
Yes. All right. Thank you, Deepa. I have one question. So just to assess the effectiveness of the methods that you mentioned. So you have your psychometrics, biometrics tools that are used to assess the creditworthiness. What has the success rate been?
Yeah. So
around the repayment. So you do assess the behaviors. So I think one of the figures I would have wanted to see was also just the success rate for you guys. Thank you.
yeah, so the NPAs or the non-performing asset that is the score that we give finally at the end of the day is under 2% for the entire portfolio. And also to note is that the vehicle that we are giving, it's a commercial, the loan we are giving is for a commercial vehicle. So that in itself is giving them a livelihood. So there are customers who have never driven before or never been working before, but they wanted to do something to improve their livelihood. Even in such cases, we have given a loan, knowing that there is the livelihood or the mechanism for paying back the EMI is coming from driving that vehicle itself. And that is where our telematics also helps us a lot, because we also make sure that we have automated triggers where we get information that if a particular vehicle has not run for 3 days, then our ground staff will go and check what is happening. Is the customer okay? Is there a problem with the vehicle? Is the dealer or the retailer not fixing the problem? All of these things, so that we make sure that the customer is able to do his repayments. So the telematics helps a lot for us to make sure that the customer doesn't default.
All right, thank you.
Thank you so much, Candy. May I invite Jorge to ask a question? Thank you.
Thank you. I have a one question. I don't know if you have credit problems that could not be paid, and how did you solve it?
So we have a couple of things over here. The first one is, of course, we don't wait until the end of the month for the customer or for us to know that the customer might have a problem. We check, as I've just said, the telematics. We check if the vehicle is performing, if the vehicle is being ridden, which is a way for us to know that yes, the customer is earning and he will be able to pay the EMI back. So we have a minimum distance that the customer has to drive every day in order that he is able to make an EMI payment. So we track this. And in cases where there is a certain number of misses from the EMI, because it's an asset-backed loan that we are giving, we do have the option to repossess the vehicle and either sell it off in the secondary market or give a new loan for the people. Now, this overall, the segment has been seen in a way that, yeah, people will not return the loan, people will not will run away with the vehicle and so on. But we have actually seen with the numbers that it is under 2%. The non-performing assets are under 2%, which is actually a very good number if you compare with any other loan type as well. So to answer your question, how do we make sure that they pay back is through making sure we have constant contact. And if they don't pay back, we do have an option to repossess their vehicle, which is our last resort.
That's right. Thank you.
Thank you so much. Can I invite Mel to ask a question?
Yeah. Thank you, Deepa, for the presentation. It appears that you mentioned a couple of times the 2% default rate or NPA ratio. It seems that the scenario-based psychometric checks and plus including the telemetric model somehow accurately predicts creditworthiness of the the borrower. My question is, aside from the actual NPA, did you perform any model validation or backtesting to really check the accuracy of the credit scoring model?
The model that we have developed itself?
Yeah.
Yeah. Not something differently, but we have started to do the same scoring. So we do not use only the score of the intent. Where there is availability of credit score, we combine the score as well. So what we did is we ran a pilot of the psychometric tests with the normal people who already have a particular credit score to check if we used both the models, we used both the scoring, would this particular person would get a loan or not. So in those cases, we are still trying to see if the model is correct to compare both of them together like that. But it came out to around 70% of the people who would have got loan with just the credit score were able to get a loan with us by going through the entire process of the credit score plus the intent to pay back. So
Okay.
Yeah.
Yeah, and last question, Deepa. you mentioned that you are keen to or looking to immediately scale the business. What is the status now of, do you have any expansion activities,
Yes.
and have you identified any major challenges in terms of scaling this meaningful business?
Yes. So there are two aspects to our business. One is making sure that our customer base remains and expands in the financially excluded section. And the second major one is to make sure that our sustainable mobility platform that we are building is also expanded into other modes of traveling so that we can get more customers in as well. So on the first part of the customer segment itself, till now we are being very organic in our way of going to a particular 3 tier, 2 tier, or 4 tier city and starting our work over there. But last year we have seen a lot of impact funds and banks and NBFCs who have approached us saying, please do a dedicated mandate for a particular group of people in a particular place in India. Yeah. So this is one of the areas that we are looking at, and we are partnering because of the ways the market operates. Even though it's India, each part of India is different, their mentalities are different, the way the people react is different. So we have to make sure that when we are giving a financial product, we take all of this into consideration. So that's one, where the banks and NBFCs are helping us a lot to team up with them and raise debt in order to get more customers in. Then the second part on the vehicles itself, we have ventured now into, first we started with the tuk-tuks, then we ventured into the two-wheeler space, and now we also have the three-wheeler cargo space, which are all individual customers. And we are also expanding into fleet operators who are fleet aggregators, where they also need financing options. So this is the scale at which the two sides of the scale that we are trying to bring in.
Yeah, thank you. Thank you. That's all.
Okay.
Okay, great. I think we have time for just one more question. Does anyone have any questions they'd like to ask? Candy, you happen to have one? Oh, you're muted at the moment.
Thank you very much, Vidya. It's a two-pronged question. She touched on it partly as she was responding as well. So when it comes to the nature of Revfin, what are some of the key takeaways that regulators or policymakers can consider? And the other side of the question was also, given the banks and the role that they play, and because with fintechs you hear a lot that banks are not catering to certain parts of the communities. What are some of the key takeaways that banks can also take towards institutions such as yours?
Yeah. So as far as the regulators are concerned, so the model that we are doing, the psychometric test, is not something new in the market. There are methods to do it, but nobody has used it actually, because each company or each one has to come up with their own scenarios at which they are going to test. Yeah. So from the regulator perspective, we have already been approached by RBI and also FACE, which is an organization which takes care of customer-centric uh, information, to make sure that this psychometric testing is done on a larger scale and larger pool of things, of people, so that they can actually make sure that they can integrate it or make it a little bit more structured and mainstream. Yeah. We are not there yet because we do not have that resources. So we have went back to them and asked, like, could you give us some resources to do this study? And that is where we are at with those organizations. And another thing they have asked us to do is, which we anyways have in the plan, is to make it more regional and language oriented, because today major market speaks English and Hindi. So we have it in Hindi and Gujarati, but we need to expand it to further markets. So banks are looking at it, but they want us to do a bigger study before they can say that, yes, we are okay with including it in our scoring system. And as far as for bank roles are concerned, the current limitation of banks is that they have a very small mandates among the bigger mandate that they have to allocate funds specifically for tier 2, tier 3, because they don't see tier 2, tier 3. They just allocate saying it's for women empowerment, it's for youth empowerment, or it's for sustainable mobility. When they do this, it is for the overall, and major portion of that mandate money goes to tier 1 cities, which also has the biggest population. And that is where we have asked banks and NBFCs who have already partnered with us to say, keep some of that mandate specifically for tier 2 and tier 3, so that companies like not just Revfin, but there are other companies as well, so who can make sure that this is spread to tier 2 and tier 3 and not just keep it at tier 1.
Thank you. Just a last one. The 16 minutes you mentioned, is that when I'm doing the psychometric included,
Yes,
or is it okay?
it's
So it's end
included.
to end. Okay.
Yes. So you
Thank you.
upload your KYC documents, we check it, we verify it with the national registration, then you do the psychometrics, the biometrics are happening in the background, and according to the rules set, you get an approval or rejection at the end of 16 minutes.
Thank you.
Okay, great. Thank you so much, Deepa. I'm going to have to stop the Q&A for now. Thank you so much for your
Thank
presentation.
you. Thank you, everyone.